Candles make sense only when you read them through four things: structure, participation, momentum, and location. That's how you turn simple information into a clear, controlled decision. Start with structure. Look at where the price is and compare it to where it's been. Notice how price behaved when it reached certain levels. Did the price pause at that level, reverse, or break through it? Watch what happens when price returns to these levels. What a candle does at these levels does not mean the same thing as when it happens in a random location. That's why structure matters. Next is volume, or participation. The price will show you the direction of the move while volume shows commitment. If price moves with strong volume, more traders are involved. If the price moves with little volume, it means there is less interest and the move may not last. Without participation or volume, movement by itself does not mean much. Now look at momentum. Are the candles full or do they have long wicks? Are they closing strong or showing signs of weakening? Momentum tells us whether pressure is building or fading, and it cannot be determined from one single candle name or pattern. It comes from how price behaves across multiple candles, not just one. And finally, we look at the candle's location. Look at where price is right now and observe levels to where it has reacted before. Did it stall, pull back, or break through? How the price behaves at these levels is what matters. Many beginners make the mistake of focusing on the candlestick pattern while ignoring where it forms on the chart. But the truth is simple. Where a candle forms matters more than its shape. When you combine structure, participation, momentum, and location, the candle gains context and tells you a clear story. Now you can make decisions based on what the market is showing, not what you hope will happen. There is one more piece many traders ignore: when to act. This is where environment matters. The same candle can mean different things depending on what the market is doing. In a trending market, price often continues, so behavior is easier to follow. In a choppy market, price moves up and down without any clear direction or progress. If you interpret candles the same way in every condition, you will most likely make wrong decisions. A strong-looking candle in a trending environment is likely to continue. That same strong-looking candle in a choppy environment can fail quickly. If you don't recognize the difference, you'll end up taking trades that don't work or don't go anywhere. So before you take any trade, identify the environment. If those pieces line up, we can then decide whether the trade is worth taking. When conditions are not clear, we stay out. Putting these things together will change the way you see the chart. Your thinking becomes clearer. You stop chasing price and start observing behavior. Instead of reacting, you wait for things to line up. Then when they do, you respond with control. In the next video, we'll take a closer look at volume, also called participation, and how to use it to help guide your decisions.